Hello, this is Bruce Wan, Head of Research for MaxCap Group. In this video, I want to take a look at the funding gap that's emerging in the commercial real estate markets and consider what that means for different investment strategies and different sectors over the next couple of years. The first and most obvious question is, what is this funding gap? We have a challenging world for asset values right now. The combination of high interest rates, weaker demand growth, and cautious sentiment is pushing prices lower and cap rates higher. At the same time, lenders and regulators are becoming much more conservative on leverage, partly reflecting the declines in collateral values and partly reflecting the concerns arising from the US regional banking crisis. If we take a look at this rather colourful chart, we can see how the simultaneous moves to a lower loan-to-value ratio and a higher cap rate combine to create a funding gap by reducing the value of the equity capital and the availability of the debt capital. This capital shortfall is certainly there across all real estate sectors, most evidently for the unpopular office and retail sectors where cap rates are rising the most and leverage ratios are falling the most. Even for the more popular sectors like industrial and logistics, rising cap rates have increased capital requirements, even if lenders are still having good appetite for the sector. Altogether, this widening funding gap will have very clear implications for investor strategy for a number of years ahead. For existing equity investors, the world is still very challenging because of the ongoing pressures on asset values. For fresh equity investors, there is a great opportunity to be buying into the market at much better pricing. But it is important to be very selective about the sector you're going into and the entry price point. For credit investors, this is a great time to be issuing floating rate loans. The return outlook is improving with rising cash rates and widening margins. So what are the main takeaways here? Falling values and lower leverage are creating a funding gap in real estate, driving the need for more equity and debt capital. Investors need to mind the gap, which will be more pressing in unpopular real estate sectors where values and leverage ratios have fallen the most. This is creating opportunities, particularly in credit strategies where returns are being supported by rising rates and widening margins. If you're after more on this story or are interested in the opportunities ahead, talk to us and our capital team. This has been Bruce Wan for MaxCap Group.